There was a time when headcount growth was a badge of honor. The faster a company was hiring, the stronger it appeared. Expanding teams signaled momentum. More engineers meant faster product development. More salespeople meant higher revenue potential. In boom cycles, aggressive hiring was often interpreted as confidence in the future. But in 2026, that mindset has shifted. Across industries, especially in technology, finance, and high-growth sectors, a new discipline around headcount growth is taking hold. This shift is not about freezing ambition. It is about redefining efficiency. Over the past decade, many companies expanded rapidly in response to strong demand and easy access to capital. Hiring was aggressive. Teams were built ahead of projected growth. Layers of management expanded. Specialized roles multiplied. When demand softened and capital became more expensive, the consequences became visible. Payroll is one of the largest fixed costs for most organizations. Once headcount expands, reducing it is painful, disruptive, and often reputationally costly. Executives learned a difficult lesson. Scaling people ahead of sustainable demand creates structural rigidity. The new discipline around headcount growth begins with a more cautious approach to forecasting. Instead of hiring for projected demand 2 or 3 years out, companies are aligning recruitment more closely with confirmed revenue visibility. Expansion is staged. Hiring approvals are tied to measurable business milestones. This does not mean companies are avoiding growth. It means they are demanding clearer justification for every new role. Technology has also changed the equation. Automation tools, AI-driven productivity software, and workflow optimization platforms are enabling teams to accomplish more without proportional increases in staff. A smaller engineering team supported by advanced AI coding assistants can maintain output levels that once required much larger groups. This shifts the focus from hiring volume to productivity per employee. In boardrooms, headcount discussions now center on efficiency metrics, revenue per employee, operating income per employee, output per team. These ratios have become critical indicators of organizational health. Why the new discipline around headcount growth is emerging also relates to cost structure flexibility. Payroll is typically a fixed expense. Unlike marketing budgets or certain operational costs, salaries continue regardless of short-term revenue fluctuations. In volatile environments, heavy fixed payroll burdens can constrain strategic agility. Companies are therefore exploring more flexible talent models. Contract-based specialists, project-driven consultants, hybrid staffing arrangements, strategic outsourcing. These approaches allow organizations to scale capacity without locking in permanent fixed costs. Another driver is investor scrutiny. Public markets have become more sensitive to margin discipline. After periods of rapid expansion followed by large-scale layoffs in certain sectors, investors are rewarding companies that demonstrate measured hiring practices. Aggressive headcount growth without corresponding productivity gains is now viewed skeptically. There is also a cultural dimension to this shift. Rapid hiring often creates organizational complexity. Communication layers increase. Decision-making slows. Redundancies emerge. Maintaining alignment across a rapidly expanding workforce can become difficult. The new discipline emphasizes intentional structure. Instead of expanding broadly, companies are investing in targeted, high-impact roles. They are prioritizing talent density over sheer volume. The goal is not to have the largest team, but the most effective one. This shift is particularly visible in technology companies that previously prioritized growth at any cost. After experiencing cycles of overexpansion and contraction, leadership teams are embedding hiring discipline into long-term planning. Every new hire is evaluated in terms of strategic necessity, measurable impact, and long-term alignment with core objectives. Why the new discipline around headcount growth matters extends beyond cost control. It enhances resilience. Organizations that grow cautiously are less likely to face sudden layoffs when demand slows. They maintain morale stability. They preserve institutional knowledge. They avoid the productivity disruptions that often follow rapid workforce reductions. Stability becomes a competitive advantage. At the same time, this discipline encourages investment in internal development. Instead of defaulting to external hiring, companies are upskilling existing employees. Cross-functional training, leadership development, and AI literacy programs increase internal capability without expanding payroll. This strengthens long-term talent sustainability. The role of AI is central to this transformation. As AI systems automate routine tasks and enhance decision-making, companies are rethinking the composition of their workforce. The emphasis shifts towards strategic, creative, and high-leverage roles. Administrative and repetitive functions are increasingly supported by automation. Headcount growth, therefore, becomes more selective and skill-focused. The new discipline does not eliminate hiring. It elevates its importance. Each addition to the organization must deliver measurable value. Hiring becomes a strategic investment rather than a momentum signal. Executive meetings now include detailed workforce planning discussions. Scenario modeling examines how headcount levels perform under varying demand conditions. Hiring pipelines are paced according to revenue certainty. This reflects a broader business maturity. Why the new discipline around headcount growth is taking hold ultimately comes down to sustainability. Growth built on uncontrolled expansion can unravel quickly when conditions change. Growth built on measured, productivity-focused hiring creates durable operating leverage. In a world defined by rapid technological change and economic uncertainty, agility matters more than size. Headcount growth is no longer about how many people a company can hire. It is about how effectively it can deploy talent. And in 2026, that discipline may be one of the clearest signals of long-term strategic strength.